You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 13th day of August, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. I am going on the record today that I am firmly convinced that Americans, not all, but apparently a majority, have actually lost their mind. Yes, I'm talking about the upcoming elections. Yes, I'm talking about the polls. And yes, I know it's not a done deal. But our economy is in so much trouble. And you've got people out there doing the Kamala happy dance in the streets. The woman who for almost 4 years now couldn't string together a complete sentence or just repeat the same sentence over and over. Well, the passage of time, that's, time passes and well, that's, of course, the passage of time. I mean, my goodness. And according to the polls, the majority of Americans want to put her, and the media, of course, this is all backed by the media because she hasn't said a word. As far as an interview, any discussions. Can you imagine her being in control of that nuclear submarine heading to the Mideast and all those aircraft carriers? I mean, this has become an upside down world. But hey, to each his own, I guess. Just like we have to trade what's in front of us, we got to live what's in front of us. So get ready, America. Because Donald pulls something out of his hat, and he's pretty good at doing that. The next 4 to 8 years and possibly more are going to lead us into the greatest depression of all time. 8 years out, I don't even know if we'll be speaking English anymore. But anyway, just a happy thought to chew on. Let's jump into our daily devotional. The topic of this week's devotional is crashing the chatterbox. That's that endless loop in your mind, the chatterbox, the one that keeps telling you you're not good enough or tall enough or pretty enough or wealthy enough. And, well, you're just no good. We got to crash it. It's a tool of the enemy. The mind is the enemy's battlefield. Our scripture today, Ephesians 3, verses 20 through 21, from the Message translation. God can do anything, far more than you could ever imagine or guess or request in your wildest dreams. He does it not by pushing us around, but by working within us, His Spirit deeply and gently within us. Glory to God in the church. Glory to God in the Messiah, in Jesus. Glory down all the generations. Glory through all millennia. Oh, yes. Ephesians 3:20 through 21. Now, when the enemy tells you can't, just remember that God says you can. One thing I wish I had learned earlier is that going to the next level in my relationship with God doesn't mean I'm free from difficult circumstances and dark emotions. It is important for you to know that the chatterbox can't be crashed once and for all. It has to be dealt with on a daily basis. Anyone who is trying to draw closer to God faces the potential for discouragement. When I get discouraged, it's not because I don't believe in God. It's because I don't believe in myself. I know that God created the universe and sent his Son to die on the cross to overcome death and be resurrected from the grave. It's illogical for me to ever doubt God's capability. What I can doubt is my ability to do great things on God's behalf. The chatter sounds something like this. There's no way I can do that. I know God is powerful, but I'm nowhere near ready to be used by him. None of us on our own is ever ready to do the incredible things God calls us to do. Peter wasn't ready to walk on water under his own strength. David wasn't qualified to lead God's people. And Abraham was too old to become a father of many nations. But God said they could, and they did. So when the chatterbox says you can't, you're not, or you won't, be ready to answer with this. God says, I can. When we start listening to God's voice above all the others, chatterbox knows his time is almost up. Join me in a word of prayer. Heavenly Father, thank you for the encouragement that you speak over our lives every single day. You are infinitely powerful, yet gracious enough to use imperfect people like us. Give us the confidence to know that you have specifically placed us where we are today to fulfill your purposes. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Tuesday. All right, let's take a look at the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices, as they're called. The Dow's up 267 points. The NASDAQ is up 309, almost 2%. S&P 500 is up 63, almost 1.25%. The Russell 2000 is up 17, almost 1%. And in the commodity basket, crude oil down $1.52, trading 78.53 last. It's a drop of almost 2%. Gold up $4.50, 50 cents, trading 25.0850 last. Silver down 32 cents, trading 27.69 last. That's a drop of almost 1.25%. In the Asian markets at the close, the Nikkei posted a gain of 1,207 points. That's a gain of 3.5%. The Shanghai gained 9 points. The Hang Seng added 62. And in the European markets, at the close, FTSE up 24, the DAX up 79, the CAC up 25. So it's been a long time, but it was a green day in Asia. It was a green day for the UK. And it's a green Radio Tuesday here in the US of A. The world's on fire, doing that happy dance. as the world collapses around us. But somehow, no one seems to care. I mean, people have really drank the Kool-Aid. Becky Davenport, she's 61 years old. She's worked in the medical and nonprofit fields her whole life and raised her 2 sons mostly as a single mom. Still, the Alaska resident fears she may never retire and may have to move in with her children. Now, Davenport lives in a community northeast of Anchorage where she works as a disability and education lead at a nonprofit. Even though her 2 sons have moved out, she struggles to secure enough to pay her bills and save for the future. She has frequent medical expenses that have hindered her ability to save, and her area's high cost of living has eaten away at her earnings. Well, there's a high cost of living. I don't care where you live in America today. There's just no escaping it. From the grocery store to the gas pump and everything in between. She fears that when she begins to receive her Social Security payments in 6 years, it's going to be roughly $2,000 a month. You can go on the Social Security site and figure out what you'll get. It just won't be enough. She said, "There hasn't been a time that I felt secure because I'm always one car repair away from being in debt. As a single mom for many years, I'll just be blunt. It's been horrible." Davenport is one of the many peak boomers. She was raised by an upper-class family in the lower 48, along the East Coast, growing up in New Jersey, Pennsylvania, and Kentucky. After her father died when she was 13, she and her mother temporarily moved to Alaska to be closer to family. She permanently settled in Alaska around the time she was in college. She got married shortly thereafter and had a son, though she got a divorce after 5 years. She had another son a few years later through another relationship that just didn't work out. She got her start in nursing, though she had to leave that career after her first marriage faltered. She also went to school for an elementary education degree, after which she qualified for welfare assistance. She stayed in the medical field for a few years, working in medical transcription, medical records, which paid her about $12 an hour when her kids were young. Eventually, she transitioned into human services and social work, finding employment at a child shelter, and working with adults and children with disabilities and mental health problems. Davenport now works as a disability and education lead at a Head Start program, helping improve the quality of life for low-income rural Alaskans. She said this has been her highest paying position so far. My career path has finally gotten to be decent pay, but it's not great, and I'm still single. Cost of living is pretty high here, and it's really hard to make it on your own. Though she's worked her whole life, her income as a single parent over the last nearly 4 decades just hasn't been enough to save for her future. She said she hasn't received much financial support from her family. They're struggling too. Over the years, she's learned to pay her bills strategically, so she wouldn't fall too far behind in payments. I usually had more money going out than coming in. I was kind of a master at juggling bills. I had some credit cards that I used for emergencies and ended up defaulting on those. I barely managed to scratch out a living and keep a roof over my kids' heads. For much of her life, more than half of her income went towards rent, and she never had enough money to purchase a home of her own. Now, this is what we call, I guess, working class poor. Between child support and an increase in work income, her income ended up slightly above the housing assistance cutoff when her kids were growing up. Once her kids got older and moved out, she could more comfortably afford her daily expenses for herself and her dog. Though she said it's still a stretch with her medical needs and trying to save a little something for retirement. Her current position pays between $28 and $29 an hour, plus a longevity bonus, though she only works 10 months a year and doesn't get a paycheck for the summer months. She said she values the remote flexibility of her job as there aren't many options in her area. Her rent is $1,200 monthly. Now, she talks about a high cost of living. You can't get an apartment in Phoenix for $1,200 a month. She's paid between $3.50 and $4.50 a gallon on gas, more than the national average. That's about average for Phoenix. Though she mostly works remotely, she keeps her food costs low by buying in bulk, making her own bread, and getting food from friends. Utility costs like electricity increase during the cold and snowy winters. She has good insurance through work, which gives her peace of mind since she has chronic medical problems. Still, her high deductible makes it so she has to play a game of deciding what treatments she can get or not. Treatments for her migraines can cost her about $2,000 each time, and she's had to put some of her treatments on hold completely. So I'm painting a picture here of what's happening to an awful lot of Americans. And I wish I could say that it's going to get better. And perhaps eventually will. I honestly don't know if it's going to happen in our lifetime. Well, let's look at some market news. U.S. stocks, of course, rose this morning as Wall Street digested cooler than expected inflation data and awaited an update on consumer prices. Got the producer price index today. We get the consumer price index tomorrow. At the time of this article, the S&P was up more than 1%. The NASDAQ was up 1.7%. The Dow Jones was up about 0.5%. So far, it's the best 3-day stretch For the NASDAQ Composite, the NASDAQ 100, and the S&P 500, with each tracking 4 straight green days. U.S. producer prices, often a signal for where consumer prices are heading, rose just 0.1% month over month in July, lower than economists forecast. Year over year, the producer price index rose 2.2%, nearly in line with the Federal Reserve's 2% target for inflation. The PPI release serves as an appetizer for tomorrow's reading on consumer prices. July's retail sales reading, a key indicator of the health of the U.S. consumer, is set to follow on Thursday. All high-impact news events. Wall Street is coming off an unusually boring day after more than a week of volatility. The S&P 500 and the NASDAQ on Monday continued slowly building back toward the highs the indexes saw before a 3-day sell-off wiped out a decent chunk of the year-to-date gains. And I've pointed that out to you each day on the daily chart. Price tends to fall a lot faster than it rises. It takes financial commitment for price to rise. For prices to fall in the stock market, all it takes is for institutional traders to hit pause on the buy side. Home Depot was the most significant name on the earnings docket today. The home improvement retailer's shares fell after it cut its outlook on comparable same-store sales for the rest of the year. In other individual movers, Starbucks gained over 20% after a shock announcement that it was replacing its CEO with Chipotle chief Brian Nicole. And for every action, there's an opposite reaction. Chipotle shares tumbled more than 10% on the news. Nvidia gained over 5%, building on a 4% gain yesterday, as analysts at Bank of America named it a top rebound stock. Now, tomorrow's inflation report is set for release at 8:30 a.m. Eastern. Best advice I can give you is be flat, because you don't know what it's going to say. The expectation is to show headline inflation of 3.0%, unchanged from June's reading. On a core basis, which strips out the most volatile costs of food and gas, because, who uses that? Prices in July are expected to have risen 3.2% over last year, a slowdown from the 3.3% annual increase seen in June. Monthly core prices, however, are expected to rise 0.2%, compared to 0.1% increase in June. The CPI in June surprised to the downside. We expect some of that surprise to reverse in July. That's according to a Bank of America economist. To note, June's data was the first time since May 2020 that monthly headline CPI came in negative. It was also the slowest annual gain in prices since March of 2021. While July's inflation data will likely not be quite as low as June, it is in line with prior trend in deflation and should meet the Fed's benchmark for beginning rate cuts in September. But as we discussed yesterday, one of the Fed heads that gets to vote on that doesn't think it's time yet. From Bloomberg, Alphabet Incorporated. Those investors are anxiously awaiting a Google hardware event today banking on new AI features to help stop a sell-off that's wiped out more than $360 billion in market value in just 1 month. 360 billion wiped out in just 1 month. Today, Google is unveiling one of the biggest redesigns of its Pixel phones in their nearly decade-long history at an event starting at 10 a.m. in Mountain View, California. While the devices are usually an afterthought for investors because of their small revenue contribution relative to Google's digital advertising business, expectations are high that new AI capabilities could demonstrate leadership in the highly competitive arena. We're hoping to get some solid information about the Google AI product to help turn around this period of profit taking. A comment from a senior portfolio strategist at Ingalls & Snyder. It's very helpful for investors to hear news like this, and generally, most of the time, it's positive news and will help the stock. But can it restore the $360 billion wiped out in the past month? I guess that's the big question. Ford and Mazda are warning the owners of more than 475,000 older vehicles in the U.S. not to drive them because they have dangerous Takata airbag inflators that have not been replaced. The warning issued today covers more than 374,000 Ford, Lincoln, and Mercury vehicles from the 2004 through 2014 model years, and nearly 83,000 Mazdas from the 2003 through 2015 model years. So if you drive one of those, better check with your dealer. And they say you shouldn't even drive it, so I don't know, I guess you got to call for a tow truck to come and take it to the dealer. Now, everyone knows, I'm guessing at this point, that Donald Trump raised the prospect last week of having a say in Federal Reserve actions. He set off a debate between the two presidential campaigns that elevated the central bank into a key 2024 campaign issue. First, Vice President Kamala Harris responded she would never interfere. Of course she wouldn't. She still thinks the Fed is part of the U.S. government. Then J.D. Vance doubled down on the idea, even as economic experts warned that political interference in monetary policy is a bad idea. That's not what our forefathers said. Trump's running mate said in a CNN interview that the former president has said something really important and actually profound, and that monetary policy should fundamentally be a political decision. Now, we have a very educated audience, and everyone here knows that the Federal Reserve is a privately held corporation and is not a part of the U.S. government. They simply make money, printing money, and loaning it to the American taxpayer. The focus on the Fed also comes ahead of a speech Friday in Raleigh, North Carolina, where Harris, according to a campaign official, will unveil an economic plan focused on lowering costs and the issue of corporate price gouging. Well, we eagerly await that. And where's the most expensive place to live in the U.S.? San Jose, Sunnyvale, Santa Clara, California, also known as Silicon Valley. The median home price there has now topped $2 million. Frisco, Oakland, and Hayward, we're at $1.5 million. Just below that's Anaheim, Santa Ana, and Irvine. Then we go across the pond to Honolulu, where the average home is just over 1 million. And if we drop all the way to the bottom of the list, you can live in San Bernardino for just $600,000. The median home price in Silicon Valley topped $2 million in the second quarter, the first time a U.S. metropolitan area has exceeded that threshold, and a symptom of the nation's persistent affordability challenge. Prices for existing single-family homes in the San Jose, Sunnyvale, Santa Clara area rose 11.6% in the second quarter from a year earlier to $2.08 million. No metropolitan area in the country had exceeded $2 million, according to the National Association of Realtors, who has data going back to 1979. There you go. That's the news fit to read. Okay. Last week, week 314, Logic 247. We ended up with a total of 81 alerts issued. 12 were left waiting at the end of the week. 65 actionable alerts, of which 4 or 6% would have been stopped out based on market structure and a simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week is off to a very bumpy start by comparison. Over the last 315 weeks, we've issued over 17,500 individual handcrafted alerts. And on a weekly basis, we've averaged 20% or less being stopped out, again, based on market structure and that simple process that we teach all of our passport holders. This week, we've issued 28 alerts since the markets opened Sunday night. Still waiting on the outcome of 19 actionable alerts, of which 5 were stopped out. That's 26%. Again, last week was it 6%? Yeah, 6% last week, 26% this week. I suspect we'll see it drop down to the average by the end of the week, but you never know. Markets have been a little weird of late. Now, the logic alerts are not just E-minis, they're also crude and gold and silver and euro and bonds. And they have an entry price, an initial target, additional targets, and a final trade to target. The concierge trade alerts, they're a little bit different in a couple different ways. The purpose of the logic alerts is so that you learn how to read a chart, how to spot your entries using market structure, how to find windows of opportunity where you have the least chance of resistance to your trade. Now, the logic alerts, again, can come out anytime around the clock. We have traders around the globe and futures trade around the clock. So a logic alert can come out at 2 a.m. or 2 p.m. as opportunity presents, but there's always time to get the alert, go study the chart, and be patient until price gets there and actually triggers the trade. The more times you repeat that process, the quicker you'll learn to actually read the chart. Now, the CTAs are after you've passed through the Logic 247 stage, and this is where you test your mettle to see if you have, in fact, learned how to read a chart. The first thing you do when the report is published It's a static report. It comes out shortly after the Globex opened last night. It came out, it might have been 1 minute after. Yeah, right on the money. First thing you want to do when the report is published is go to the 30-minute chart of the markets you actually trade and make note of where price is at the time the report is published. Typically, it's more like 6:15, 6:30. The Globex session, in other words, the Tuesday session that we're in right now, opened last night at 6 p.m. Eastern. So once you make a note where price is at the time the report is published, then draw a line in the sand at the long target, a line in the sand at the short target. Those will help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. BBC is the green line you see on all my charts, stands for bull, bear, cross. Now, markets are fractal in nature, so no matter what market or time frame you apply the BBC, it functions the same. Price gets above the green line, you anticipate higher prices. Price gets below the green line, you anticipate lower prices. Now, for the purpose of the alerts, both logic and CTAs, we always use a 30-minute chart. There's nothing magic about 30 minutes. It's just the time frame I chose years ago, and I've stuck with it. If it's not broke, leave it alone. This is where you look left to spot those targets or obstacles that you learned how to read into the chart with Logic 247. And this is where you should have learned how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. It's above the 30-minute BBC, it's trying to reach the zone above. Price is below the 30-minute BBC, it's trying to reach the zone below. Publish the zones every week for our members and trial members since December 14th, 2009. So December will make 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, carved in stone for the entire week. Other than that, resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's take a look at what we got going on here. We have hit the daily BBC. Just above it is the 38% Fib retracement. That's why it says potential resistance times 2. Now, this rally may hold here. It may spike up to the 38. But between the two of them, we would expect a potential resistance that would send us back down first to the 50% Fib retracement, and then the step line, the 62, and then red and falling, which is curling up and trying to turn blue. If price travels through the BBC and the 38, okay, then our next major resistance will be right here, about 54.96. Then we've got the 24% Fib retracement, and this last pullback to the BBC where we spiked it, we hit 5,603/4. As you can see, the pullback to the BBC holds more often than it doesn't, whether it's pulling from below or from above. This pullback held, and so now we'll see if this pullback holds. If it holds, we'll get another leg to the downside. If that high impact news tomorrow morning comes in cool, as they call it, or cooler than expected, perhaps we punch through, spike it a little bit. We got a leg and a retracement, a leg and a retracement, a leg and a retracement. Now, the point of showing you a daily chart is because I want to encourage you, whatever you trade, whether it's futures or stocks or crypto or Forex or ETFs, I want to encourage you to spend 2 minutes with the daily chart before you start your trading session. Institutional traders, the ones with the huge accounts who trade in huge size, who in turn move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size and limiting the amount of risk required. Obviously, those with the larger accounts are able to risk more and stay with a profitable position far longer than you or I might be comfortable with. So, by spending 2 minutes with the daily chart, you're literally looking over the shoulder of the deep pockets that move price. If you simply do what they're doing long enough to get your goal for the day, and then exercise the discipline to put the mouse away, your trading should improve considerably over time. Okay, the 30-minute chart, that's what's used for all the alerts, logic, and concierge. We opened last night with a slight gap higher open, filled that. We had blue and climbing, so the market found resistance at the BBC, supported blue and climbing, and then we made a run right up to the zone, which yesterday held the market in check. It held it in check for just a bit last night or this morning off the London Open. Then we ran right up to the target and took out yesterday's high, quickly retraced back to yesterday's high. However, that's still a sign of strength because we took it out by more than just a little bit. Price came back. Price always reverts to the mean. In our case, the mean is green. Again, it's called the BBC. Bullish above it, bearish below it. Now, price got below the BBC, but ground to a halt at the previous bullish cross. Whenever you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support, and it was. That support sent us up through the BBC. Now right here, we moved through the weekly zone like it wasn't even there on the 30-minute chart. Only 3 things happen when price encounters a weekly zone. The most common is consolidation. The second most common is this, rejection. And then we have the slice, where price, this was a green candle all the way up. But as it ran out of steam, it retraced back to the zone it sliced through and then continued in the direction of the slice until it got to the next zone, where again it consolidated and pulled all the way back to blue and climbing, found support. The fact that it didn't pull all the way back to the BBC, that's a sign of strength, and that puts the market where it is right now at 54.41 and a half. On the Dow, here's where we opened, ran into the BBC, but we had the support of blue and climbing. That took us up to the zone where we consolidated, and then we came just shy of hitting the target. We hit the top of that candle, but we didn't hit the wick. Price then retraced. We got below the BBC. We had red and falling. Took us all the way down to the zone, through the zone, long enough to hit the short target. And if you follow the horizontal line on my cursor, what do we got there? A triple bottom, quadruple bottom. Here, Friday, Thursday. It's been good support since last Thursday. That support will always send the market looking for resistance. Almost hit the zone, just like we almost hit the target. Zones are an area, just like fibs are an area. Get a retracement back to the BBC, but we've got blue and climbing. It never turned red on the pullback. And when that happens, you should expect a nice bounce, which we got. And we slightly took out Friday's high, printing 39,830. Now again, this was a slice that retraced back to the zone it sliced through. Now it's trying to take out the high of the session. If the black step line crosses to the right side of blue and climbing, then anticipate a retracement back to the BBC. But if we take out this high, then the market will attempt to run at the next zone overhead. On the Russell, open just below the zone. Price is pinched between resistance and support. Support went out, and we made it. See this high yesterday? Right here, top of that candle? That's where the market found resistance. That's market structure. So resistance is going to send the market looking for support. And where do we find support? At yesterday's low. Now support's going to send the market looking for resistance, which it found at the zone. And then we retraced back to the BBC. The pullback held. Now we're climbing. And we don't have any obstacles looking left in our way. So price should glide right on up to that weekly zone at 2105. Oh, something like 2101 up to 2104. That's 3 points. It takes 2 points to get your goal for the day. On the NQ, which is on fire, here's where we opened last night. Again, blue and climbing, got us above the BBC. Got a leg and a retracement, and a leg that nailed the target to the tick. A retracement, and a leg, consolidation at the zone. Then we made a decent run at the next zone overhead. Came a little bit short. That's going to send us back to support, which we found at the previous bullish cross. That support, along of course with the news that came out this morning, better than expected, has sent us flying high on the NQ. Highest weekly zone is up at 19,303. Today's only Tuesday. On crude, here's where we opened. We pulled back to the BBC. The pullback held. Got above red and falling, turning red and falling into blue and climbing, which is bullish. And we made a run right up to the target at 80.10. Resistance will always send the market looking for support, which it found at the short target, and the weekly zone, which is 78.20/25. These are the zones that were published yesterday morning at 6:15 a.m. Eastern. On gold, here's the open. We ran into blue and climbing. When blue and climbing gets directly above price, it can often act as resistance because it's on its way to becoming red and falling. And so we consolidated sideways, got back above the BBC along with blue and climbing, and we were not able to put in a higher high. Like this high came just shy of the session's high put in last night around 8 p.m. Eastern. So right now it's pretty quiet for gold, just kind of consolidating sideways. We had a big day yesterday, and after a big day like yesterday, a wide-ranging day, you'll often have a day of some pretty quiet sideways consolidation. Silver, we opened at the zone, plus we had blue and climbing overhead. That sent price below the BBC. We hit the zone, bounced, and we dropped. This low here is yesterday's low here. Okay? Support. Sent us looking for resistance, which we found at red and falling. That dropped us again to this area right here. Support is back to resistance, back to support, back to resistance, all the way down to the zone for support. Back to the BBC resistance. Sends the market down to the CTA short target. Support. That sends us back up to the BBC. And so far, for the 230-minute candles, resistance. And we'll talk about the euro when I come back. Michael's going to give us a recap of what happened in the live training room. And then we'll do some live trading on the TradingView platform. And then we'll finish that recap and wrap things up with our good word for the day.
All right, here we go. Everybody ready? All right.
Yeah, it looks good. Looks good.
Good. Here we go. Yes, good afternoon, everyone. Today is Tuesday, the 13th day of August, 2024. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. All right, you click on that purple button. There's no credit card required for the trial. It's going to bring you to this registration page, I think. Yes, this registration page where all that we ask for is your name, your email, and your phone number. There are 5 multiple choice questions. Down here at the bottom, we ask for your Ninja Trading Machine ID if you have it, or your TradingView login ID if you have that. Either one or both. We'll set you up with either of those trading platforms or both of those trading platforms if you have them. All right, that's what you need to take the trial. There's really nothing to it. Click this purple button right here at mytradingiq.com. No credit card is required for the trial. Click that button, and it'll bring you to the registration page. Okay, just fill that out. Now, we had a pretty good day today. Again, we got the goal for the day on the first trade, and we didn't have a ton of trades today, but when we go to the larger time frame like we are, you're going to see that there won't be as many trades, but they're just as meaningful, if not more meaningful trades. Right? On the NQ, well, today, if you're going to read the spreadsheet, get your CFTC risk disclosures down at the bottom. Today, the 13th day of August, 2024, we made 30 ticks on the NQ. We lost 5 on the Russell. We made 30 on the YM, and we made 12 on the ES. Put us at plus 425 with 1 contract on the morning session. Today, it took 4 minutes and 1 trade to get to the goal for the day. That one, we're up $2,000, and we took a total of 9 trades this morning. So on the month now, we're up $5,490. That's over 9 business days, averaging $610 per contract per 2-hour business day. So we are on track to having our best month again. If you were trading all year, you'd be at $63,442 with 1 contract. That's over 150 trading days. It's our 150th trading day so far this year. I don't think I missed any trading days this year yet. I'm sure I didn't miss any. So 150 trading days, averaging $422 per contract per 2-hour morning session. There might have been 1 day that I missed for something. I don't remember what. But anyway, if you were to add 1 contract per month following the 24/20 blueprint, you would be in your 8th contract right now, and you would be averaging. You would have only had to work 47.75 hours so far this year. If you quit trading, when you get the goal for the day, the goal being $100 per contract, getting 100 in this column. However, you have to do it with these numbers on the sides, whether it's the Russell, the NQ, the YM, the ES, gold, crude oil, whatever it is. It's been a while since we traded them. Look, when was the last time we traded gold and crude? Back here. Wow. March, April. April was the last time we traded gold and crude. Anyway, I kind of got to liking the YM. We threw the YM in there instead. And the Russell and having 4 indexes. I kind of like that now. Anyway, if you were to add 1 contract per month, that means you work your way up to it, earn $2,000 per contract, add another contract. So far this year, you would have averaged $1,777 per hour for those 47.75 hours that you worked. Now, because I started with mine in January of last year, I'm on my 20th contract, I'm not on 8. I'm averaging $7,079 per hour for those 47.7 hours so far this year. Okay. So that's good stuff. That's where you want to be. The slow and steady. Do not keep taking trades once you get your goal for the day. You put that mouse away. All right. Now we traded a little bit on all the markets, and we were using the diamond principle, trying to use current markets to illustrate the diamond principle. And there were a couple of times that the markets did cooperate with us to illustrate it, and then there were a couple of times that it didn't, like right here. If we had done this on the flip side of this, we'd had the diamond principle work out perfectly right there. And this one here, it needed to get down to here after not putting in the lower swing right here, extended it out to the side, and then that was it. It was the bottom because it extended to the side, did not continue the trend. Then change directions, and if I was drawing in the diamond principle in here, we would have drawn it again right here, and the place you would be looking for is like right over here, right up here. This is what you'd be looking for in the diamond principle for this move right here. About right up there somewhere. Something like that. Yeah, that was all in lesson plan today. The trades that we took today on the YM, we took this one right here. We had a break even on that one, and plus 30 on this one over here. Okay, we didn't take any more, but you can see there were nice blue arrows in here. And again, we're on the 19 range on the YM. All right, 19 range on the YM, and a nice blue arrow there, and a great blue arrow right there too. Some really nice profitable trades for the YM today. The Russell, I struggled a little bit with the Russell, just a little bit. I didn't trade all that much, but I did stop out one time. And we had minus 25 ticks on this one that we stopped out on right here. And again, we're using diamond principle. And it played out, well, in this one right here, it played out pretty well, perfectly. We ended up with a break even on this, and it didn't put in the lower swing, did not continue the trend. So I probably shouldn't have taken this trade right here. I didn't notice that, but I probably shouldn't have taken that trade right there. Mark didn't catch me on that one. He normally catches me on 6. During the break, there was a nice blue arrow here. That wasn't actually during the break. That was at 11:09. I didn't see it. That was during the lesson. I missed that blue arrow there. And since then, we haven't had anything else. So the Russell, for the 19 range, Russell hasn't given up all that many trades today. Gave up this one here, this one back here, which I got to break even on. This one over here that I missed, this one here that I stopped out on. Okay, now as we go to a larger time frame, these black arrows are going to become more significant. All right, because you're not always going to get a pullback down that's going to hit the ribbon, where you're going to get a colored arrow other than black. But the black arrow is going to become more significant. You will see that is going to be the case. All right. So on the ES today, we had a couple of decent trades. ES is where we got our goal for the day, right at the beginning. Here it was, right here. Our first trade on the S was right here. We picked up 8 ticks. We had our goal for the day on that one, and that one did the diamond principle perfectly. Okay. The next trade was right here. We picked up 4 more ticks on that, got us to plus 12, and that one did not do the diamond principle perfectly. It did get to where it needed to go, but it dragged it out forever. Okay. See how it dragged it out all the way over here, getting up to this level right here. Took this long to get to that level. So then to get to the next level above that, should take, let's copy that and paste it on there. Take that long. Okay, and the next level above that would be here to there. It would be there. And look at that. Using that principle, it pretty much nailed it right in there. All right, so this was a smaller version of it right here. Then a bigger one. But anyway, after this trade right here, we ended up with a plus 12. Then we had a couple of break-even trades in here. And then this one worked out. And while we were doing the lesson plan this morning, this one worked out pretty well. This is what I said it was going to get up to in here. It took a little while to get up there, a lot longer than the charts were suggesting it should. It did get up there. And from there, the next one would be like right here, which it's gotten to. And the next one from here would be right up here, which it's gotten to. And that's about it. It should pull back here and give you another one. You guys from this morning, you see all that, right? I mean, the whole reason we're doing this morning, so orchestrated machine. The whole reason I was showing you this morning was because I wanted you to see how to get more out of each trade, right? That was the whole reason I was doing that in the morning session. All right, so that was the ES. We ended up with plus 8 on the ES. We had just one trade on the NQ, and it was a plus 30 tick trade. I don't know where it was. I don't know where it was. But we did have just one trade on the NQ, and it was plus 30 ticks. We had another one that I put on by accident, that I put on the MNQ that I didn't count anywhere, and that one was plus like 100 something ticks. 44 points is what it was. But that was an accident. I think the one that we did take profit on, I think, was in here. It was a long trade, I think, in here. But the NQ did have some nice trades today. It did have some nice opportunities. Remember with the purple arrows, when you take a purple arrow, you want the ribbon to be spreading out or spread out. You don't want it to be starting to squish up or get congested, right? You want it to be spreading out or spread out, right? Spreading out or spread out. See this one right here started to squish together a little bit before it triggered. Spreading out or spread out is what you want with those purple arrows. Okay. Again, the purple arrows are just showing you that the outer bands are in favor of the bounce off the ribbon. That is not a deep bounce off the ribbon. Okay. And that was it. So for those of you guys who are tuning in right now in the YouTube stream, if you have not taken a free trial with us, go here to mytradingIQ.com, click on the purple button right here. There is no credit card required for the trial. When you get there, click on that. It's going to bring you to this registration page where all we ask for is your name, your email, and your phone number. 5 multiple choice questions. If you have an administrator, give us your machine ID. If it's trading with you, give us your login ID. That is all you need to do. Okay. Do all that stuff, and we'll get your indicators indicating on your desktop. Okay. Just go through here. Jeff G. We need to meet so we can get your desktop straightened out. John B, are you in here? No, John B's not in here. All right, so now we can start trading. So we're still on a 7 range here on the yes, we are oversold right here. If we pop out of the oversold right now, it's going to be a black arrow. Now it's going to be quite a ways away from the ribbon for the black arrow here on the 7 range, so I'm not that interested in a black arrow right here. However, if it did happen, I'd be interested in a pullback on the black arrow, right? Taking a trade on a pullback on the black arrow. Now, we are now at, those of you guys who don't know, who may have been on vacation, it's gone for 2 weeks. We are now at 20 contracts. We're at the final month of our 24/20 blueprint. Okay. The ES is here testing the ribbon right now. It's got a low here 44.25. It's going to have on at 46.25. Now it's got a low 44.0. It's going to have 46.0. So we'll be buying 46.0. Okay, just like that. So the reason we went to the larger time frame, those of you guys who don't know, one, I want to go to a larger time frame anyway. Two, when all this stuff happened with Japan last week, a week ago yesterday, the markets were just too volatile to stick with the 7-tick ranges. Even on the ES, I had to go off the 7-tick range. The markets were just too volatile. So I decided we would go to a larger time frame because I want to do that anyway. All right, so over here on the YM, it's 20 ticks above the bottom is what you're looking at right there. Okay, 20 ticks above the bottom of the bar. 20 points, ticks 85 up to 05 is what you're looking at. 05. That's 805 is what you're looking at there for an entry. Now on the ES, it needs to go 4 ticks into profit, which I don't think it's done yet. 47. Yeah, it's going to hit 47 and a quarter. It's going to go up to there to 49 and a quarter. So we just got to stick it out and let it go. Needs to go one more tick to bump the stop to break even, and there it is. We'll put the stop up here at break even now, and it should go through this number, actually through the high of the day. So I'm going to bump it up to the high of the day. From there, that'd be 4 points or 16 ticks at the high of the day right there. That's what it should do. Still trying to get filled here on the YM trade. Right, it hasn't gone 10 ticks into profit yet. Almost, but not quite. If it goes 10 ticks into profit, then I'll take the order off. But this is what it looks like right now. Trying to get filled on it. Okay, if it hits this level right here, I'll take the order off because that's what I would move the stop to break even. And there it is. So I'm canceling that order on the YM. I didn't do anything with the NQ. I haven't done anything with the Russell. Now, the ES should, this is the level that I was originally thinking it was going to get up to right here. But then it started showing more stuff and it's right up at the high of the day. So I'm thinking it should get up to the high of the day from here. Okay. And let's see where it goes. Yes, if you have not taken a free trial with us, go here to mytradingiq.com. See, I don't need to see the chart anymore to manage your trade. I know my stops at break even. I know it should get up here to begin with. When it gets up there, I'll start locking in some profit. Okay, I'll start locking in profit before it gets up there. But if it gets up to here, I'll start locking in profit. Probably lock in 4 ticks right there. And then if it gets up there, I'll lock in 8 ticks. And then if it gets up there, I'll lock in 12 ticks. That's the way I plan to manage this if it happens. All right, it's possible it's going to take me out of break even. But if you have not taken the free trial and you want to, go here to mytradingiq.com and click on the purple button right here. When you click on that purple button, it's going to bring you, right, it's end up with a break even. When you click on that purple button, it's going to bring you to this registration page. Just fill it out. Give us your first name, your last name, your email, your phone number. There are 5 multiple choice questions. Give us your Ninja Machine ID if you have one, or your TradingView login ID if you have one of those. Okay. TradingView log ID is what shows up when you hover over this. It says logged in as something. Mine is CFRN right here. Okay. All right. Does anybody have any questions about anything at this juncture? This should get up here. Remember, the principle says, goes like this. Now, however long it takes to get back up here is what determines how long it's going to take to get up here, which is this distance right here. All right. And we did not continue over here yet on the YM. Okay, so you see on that trade over there on the YM, how I missed the original entry, the proper entry, which was actually right over here. I was trying to get in at 806, but because I was trying to enter at 806, I was thinking that 816, if it got up to 816, that's where I would have moved my stop break even had I filled at 806. Because it got up there, went 10 ticks in a profit, where I would have moved my stop to break even. I took the order off because if you leave it on after it goes to the point where you would have moved the stop to break even, well, then you're getting in a trade that you would have been exiting. Okay, you would have been trying to exit that trade. If you would have gotten filled, you would have been trying to get out of it at that point, and you're getting in it instead of getting out. So that's a bad thing. And if I would have left it on there, it would have just stopped me out. Minus 25 ticks. Okay. Anybody understand that? And this still trying to work itself out here on the ES. We stayed with the 7 range on the ES. We did switch it from Monday last week, I think, maybe Monday and Tuesday, but we went back to the 7 range. The Russell and the YM, I want to go to a larger time frame anyway as we move forward. You know, after this week, I mean, after this month is over, after I finish the 24/20 blueprint, doing what we normally do. So we have all of the statistics that we need to go back and say, you know, when you add on, we get to X number of contracts, it's harder to get the goal for the day because of the slippage, and you can look at things. Well, there's a lot of statistics that you can take out of all this information. And for us, you know, I just wanted to finish the plan and see where we get. And I was curious when this number right here was going to be a 7-figure number, and that actually hit last week. When it became a 7-figure number, it was last Tuesday. And so I'm also curious to see what our hourly rate is going to be after quitting when you get the goal for the day for 20 consecutive months, what the hourly rate will be doing the way that I do it. Interesting stuff. You know, Math Geek. Metaplanet. Dwayne, is that the one in Toronto Stock Exchange?
Not sure. Could be. The company's in Japan.
Is it?
Yep.
Thought that was the one we looked at one time before in here.
Yeah, it may show up on the Toronto Exchange, but the actual company
Yeah.
is in Japan.
Okay,
That's
look
why
at what
they're
this is doing right here.
quoting prices in yen.
This is surprising me the way this is coming together. I mean, it surprised me that it went down and not up yesterday when it broke out of the triangle here. But it found good support down here. This is really good support that it's finding. So now if we can get through this area of resistance, we should fill that gap. Interesting.
I think we lost your volume.
Yes, you did lose my volume. Huh. How about that? I was saying Bitcoin is no longer an inside day. It's bullish and moving up. I was also saying that this over here, this is where it should have happened, given the time that it's here. It should have happened right here. So I don't know if it's going to happen, but it's stretching it out. It is. And The NQ is moving up slowly, but the Bitcoin became it's moving up right now. Now, the Mara, I was saying I was surprised that we came out of this triangle to the downside. That surprised me. And I was also saying that now that we've gotten above here, it just has to get above this resistance here, and that should fill that gap. Right? There was another one that had a gap the other day. I think it was Netflix. It gapped up today, gapped down the other day, and I think it gapped up today. Right, let's go back here. So these drawings might make a little bit of sense. There they are. So we had this blue arrow here on the ES that we took, and it still has not put in the higher swing. It's taken forever to get up there. So I don't know what we're going to get here today. I did say if anybody wants to see anything other than futures, if you want to look at any stocks, equities, anything like that, just let me know. All right, so over here on the YM, we have the green arrow here. Now let's just do a little analysis of this green arrow. Okay. So given the current time frame that we're on, this retracement pulled all the way back here. This was the leg up. Now half of that leg up is right about here. Right about here. So you're getting a green arrow here. That should, up here, is where it should have gone to in this time frame right here. Up here is where it should have gone to. You can see it's dragging a little bit there, not quite a bit. But the retracement is just about right there. Okay, this is your 50%, so it retraced a little extra on the way back. This is a little bit deeper pullback than I would normally like. It is bouncing off the ribbon, and it did not pull back below this one back here. If I pull back below this one here, I would not be interested at all in this. Does have a little bit going for it, but it's really lost steam. You know, when it pulls back really deep like that, more than 50% back like that, you lose a lot of momentum. See how the leg back right here to here. Let's say this leg is actually shorter than that one. So in that perspective, it shouldn't have lost that much momentum. But yeah. From that perspective, it shouldn't have lost that much momentum, but it dragged it out sideways here. That's where I lost it. You see here, it was just hit the ribbon, 3 more bars. Hit the ribbon.
The ES ran into the daily BBC. So it's probably affecting the other indices.
Yeah, I haven't gone and looked at the higher time frame stuff much today. Here it is. All right, here it is. So the Russell, this is what time frame is this? 30 minute. Okay, so this is all yesterday's stuff. Weekly trading zone that we're trying to get to is right up here above us. We're just getting through the midpoint between the weekly trading zones right now. There was resistance before right here. The next resistance is up at the zone. That's on the Russell. The YM is getting above the weekly trading zone right now. It's pulling back down to it. Now, the black step line in the MA1 should act as support. If this thing goes sideways a little bit more here, like 1 more bar, and this should probably be up here inside the weekly trading zone for more support to that move. The NQ had a nice run today. That is the whole day's run right there. And the NQ's up near the high. The NQ still has not filled this gap, though. This gap way up here has not been filled yet. Okay, and the ES is coming off the high of the day. The ES is set for a little bit of a retracement right here. I don't know. You know, looking at it right now, if it really loses steam, the retracement could come all the way back down here to the weekly trading zone, but it should bounce. And just looking at it this way, the whole day's action, okay, from here to here, BBC is right there, right at the 50% retracement of the whole day's action. Now, I don't know that it's going to move back that much at all. It could pull back and bounce off the MA1 and black step line right here. But you see, as the black step line gets closer and crosses into the MA1, then the MA1 is going to want to drop down to the BBC. So it's lining up for that kind of a thing to happen over the next few hours. Not quite there yet, but that's what it's lining up for. And so Dwayne said on the daily, we're hitting the BBC on a daily. So here's the daily. We are at the BBC right there on the daily chart. Yes. And from a daily perspective, this is interesting.
Spike the BBC up to the 38% Feb retracement.
And the way it is on a daily chart, it's set up for a fall right here. I've already drawn in some stuff in here where it should drop down to. That's on that. Now I drew some stuff in here last week, I think, didn't I? Did I get rid of all the drawing objects? Did I do it on the NQ? Which one of those did I do it on? Is it the YM? I had the inverted head and shoulder thing going. I don't know where I drew that now. Well, it should be right along that inverted head and shoulder that I had drawn in there for you guys earlier. I think it was in here. It might have been on the YM. But it should be working its way back up to that inverted head and shoulder pattern that it had done. It was going something like that, I believe. I don't know which one it was, but it doesn't really matter. Things are positioned to move. I don't know what the news is going to be like tomorrow morning, but we do have someone who's crap. I just noticed something. I took that green arrow long over there. Here it is. Now, how high has it gone? 809. So my stop should be a break even on that.
We got high impact tomorrow morning, CPI, and then we've got some high impact on Thursday. I forget what it is.
Yeah, inflation on Thursday. And yeah, it's big stuff this week. So there's a lot of news coming out this week that can move the markets. And who knows? Trade what's in front of you. That's what we always say. So I have no risk on this trade anymore. It should get all the way up here, 39,894. It'll be probably 39,900. It's probably where it should get up to. Okay. All the way up here. Probably. But we'll see. It's going to go through the high of the day to get there, I think. Yeah, the high of the day is right here, 39,860. This is the high of the day. That prior swing high. But our stops at break even. We have no risk on this trade, and we're going to let it ride. Okay. I'm going to slide it over here. I'll let you know if it starts moving up or if it gives me break even. It looks like it's going to take me out of break even. So this stuff is really, really slow right now, but it is what it is. John B. Still not in here. Okay. Still in that trade on the YM. Here it is. And it is now 1:23. So we got about 6 minutes left in here. If anybody has any questions. Okay, on the NQ. Should be pulling back, testing the ribbon here. Okay. Now the NQ was way too thin to trade this morning. The MNQ was a little bit better, but it's actually not that bad right now. The NQ is not as bad. The MNQ is twice as good as far as liquidity goes, but it's not as bad as it has been the last few days. All right, we ended up with a break even on that YM trade. All right. Next do we have here? The NQ is falling back down to test the ribbon. Now it's consolidated here and it's met some resistance. It could give a bounce here. It doesn't look like it's going to be a real strong one if it does, but it could give a bounce. It's got the low right here, 62.25, so 8 points above that. 70.25. 70.25. That's what you'd be looking at. Possible long. 8 points above that. Right, and it's looking pretty weak. They're all looking kind of weak right now. Nothing is pushing up right now. They're all kind of stalling, going sideways. So let me erase the drawing objects that I have on the charts right now. Watch for the up close on the NQ. Okay, so it's dropped down to 62.25, so 8 points higher than that. 70.25. 70.25. Right? 32 range, 8 points. Why am I doing the math wrong on this? 60, 63, 64, 65. Anyway, over here on the YM, we have a little bit of movement up here. A little bit, right? It took us out of break even on that one. Over here on the Russell right now, we just about have a trade. We're in the oversold. We need to come out of the oversold right here. Right now, because it's not hitting the ribbon yet, if we came out of the oversold right now and Russell goes to black arrow, I'd really rather see it pull back some. This, I think, is messed up. Hang on, let me go 1 minute back to 31. It wasn't printing it right. Still looking for it to move up over here. And over here on the Russell, we are waiting. We're waiting on everything. I don't know, guys. I don't think I'm gonna get another trade in here. We didn't end up with anything over here on the NQ. We had to break even over here on the YM. Everything's just slowed right down on us. So I don't think we're gonna get anything else right here. That is one thing with the larger time frame stuff. There's gonna be a lot of downtime, a lot of quiet time. I have to contemplate. And so I will go here and say, if you have not taken a free trial with us and you want to take a free trial, if you have not taken a free trial with us and you want to take a free trial, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. You click on that purple button, it's going to bring you to this registration page right here, where all that we ask for is your name, your email, your phone number. Down in here, these are all multiple choice questions. Please answer them honestly. All right, they're really simple. Most of them yes or no questions. 2 out of 5. Yes or no questions. Anyway, answer them honestly. If you answer this one wrong, then you won't get any emails. Right? So make sure you answer them honestly. If you have administrator, give us your machine ID. If you have TradingView, give us your login ID. Hit that register button. We'll get you enabled. get your stuff going for you on your desktop as soon as we can. All right. And that is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, Washington City Park. You are ready.
Yep. Recap of the morning session.
Today it took 4 minutes and 1 trade to get to $2,000.
Good job.
Thank you.
Okay, guys, we left off on the euro. What was the last market? This is where we opened last night. Get a little leg and a retracement. Pull back to the BBC held, and that sent us right up to the long target resistance, which will send the market looking for support, which it initially found at the short target, these lows from yesterday. Then we spiked down to the weekly zone, and the low, this low from yesterday, not the low, but this low, and support is going to send the market looking for resistance. So we consolidated at the BBC. The news came out, and the world went wild. So we caught a leg, a retracement, and a leg. And we're not very far from this week's highest weekly trading zone on the euro. So one last look at the daily. See, we're right up against that 38% Fib retracement. Now, typically with retracements, you think of them providing support when price drops. But once price drops through a Fib retracement, then on the way back up, it can become resistance, as the 50 was for 2 days. Now this 38 is interesting because out of 6 trading days, the market found support on the way down. Once, twice, 3 times, 4 times. 5 out of 6 trading sessions, support at the 38. Now we're approaching the 38 from the other direction. So if this pullback holds, and it may start to look like a head fake, okay? Maybe we run up a little past the 38. On the way back down, the 50 is potential support. In fact, I should change that right now. Say support instead of resistance. So if the retracement, if the pullback holds, and as you can see on the last one, we spiked it a little bit up to the bearish cross. We don't have a bearish cross here, but we do have that 38. And what was once support very often becomes resistance. So on the way back down, there's potential support at the 50. And then right below that, you've got the daily step line. And red and falling is currently right at the 62% Fib retracement. And last week, major support came off this bullish cross. Last Monday, we spiked it, but we quickly reversed and spent most of the session just sitting right on top of this area. And then we rallied a little bit into the close, came back down, held 3 days, and now we've got this rally to the upside. So we're about to find out just how bullish traders really are. And that high impact news tomorrow morning probably have a pretty big impact on the market. Okay. You'll notice I haven't switched to reverse fibs yet. I could. In doing so, I would remove these fibs. And instead of drawing from the bottom to the top as you do in an uptrend, in a downtrend, you draw from the top to the bottom. And it all functions the same way. To become a member, go to mytradingiq.com. If you have any questions, call us at 42 Emini, or you can always email us, support@cfrn.net. As a passport holder, you'll have 2 hours of live interactive training every trading day. 9 out of 10 new traders don't, and that's why they fail, because they don't have anyone to teach them how to trade. Along with the daily group training for 2 hours, as a passport holder, you have access to private one-on-one mentoring, no additional charge. You also will learn a methodology and strategy, and you'll own the indicator set that is fluid across all markets, all time frames. Price flows the same, whether it's futures or stocks or crypto or Forex or ETFs. It goes from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll receive the Logic 247 alerts around the clock, Concierge Trade Alert Report every evening when it's published. Monday mornings at 6:15 a.m. Eastern, you'll get the new weekly trading zones. And on Thursday night, you'll be able to attend the members-only workshop. Everything a trader needs, all under one roof, one low price. mytradingiq.com. Okay, let's wrap it up with our good word for the day. We started yesterday talking about setting the captives free. This is part 2. Psalm 107:14. He brought them out of darkness and the shadow of death and broke their chains in pieces. When the Israelites cried to the Lord, he saved them. He brought them out of darkness and broke their chains. And he can set you free from whatever is holding you captive today. And not just temporary freedom, but long-term freedom. John 8:36 says, if the Son sets you free, you really will be free. In the King James, it says, if the Son sets you free, you are free indeed. So here's 2 steps that you can take towards freedom. 1, cry out to the Lord. In Jeremiah 29:13, God said, you will seek me and find me when you seek me with all your heart. Now, all, that's a big word. It should be in capitals. Because as believers, we often are very willing to give over parts of our heart to God. But there's that secret place. For some it's money, for some it's other things. God says, you will seek me and find me when you seek me with all your heart. Jeremiah 29:13. Away with dignity and decorum. Desperate situations call for desperate measures. Stop trying to handle it alone. If you could save yourself, you wouldn't need a savior. Give it to God, casting all your cares upon him, for he cares for you. 1 Peter 5:7. Feed your soul spiritually. Freedom is a 2-part process. The first is communion with Jesus. The Israelites fed on the Passover lamb in preparation for leaving slavery. And Jesus, the Lamb of God, declares, I am the living bread that came down from heaven. Whoever eats this bread will live forever. John 6:51. Sharing your feelings and needs with him will lighten your burden, relieve your loneliness, and nourish your soul. Jesus came to proclaim freedom for the prisoners, to set the oppressed free. Luke 4:18. Now, the second part of the process is meditating on Scripture. Rejecting God's word caused the Israelites to become slaves in the first place, because they rebelled against the words of God and despised the counsel of the Most High. They fell down, and there was none to help. It's Psalm 107, verses 11 and 12. So to be set free and stay free, feed every day on God's life-giving word. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace, and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.